Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news. The economic implications of the fear of China's virus continues to grow, even if the virus spread itself is peaking. In China, the COVID-19 numbers are still rising, up to 69,300 and a 2,000 rise from Saturday, but the doubling has stopped. And China doesn't only have the coronavirus to worry about, air pollution, especially in Beijing, is really bad again, and that is despite much reduced economic activity due to the virus cutbacks. And more research is suggesting that the impact on China and other Asian economies is going to be tougher than earlier assumed. Further, a raft of new disputes are sure to flood international courts and arbitration as increasing numbers of Chinese companies claim force majeure on existing supply contracts. And China also released its fourth quarter 2019 current account data, which showed a surplus of $14 billion in the period and $61 billion for the whole year. But that is only a surplus of 0.2% of GDP, tiny in world scale. But in Europe, they reported a goods trade surplus of 2019 of $380 billion, or 6% of EU GDP. There's a completely different scale to China's. And in Hong Kong, they're facing their biggest deficit ever as the government there continues spending following the widespread protest movement disruptions and now the flu epidemic. In Singapore, they too are planning on a major increase in deficit spending, boosted there by election year sweeteners. In the US, retail sales rose only marginally in January, up 0.3% from the prior month, but on a year-on-year basis, they're up 4.4% from January 2019. But American industrial production fell, down 0.8% in January from a year ago. Clearly, the rise in retail sales isn't based on locally manufactured goods. The drop is the first time a January has shrunk in 2016 and continues a string of 7 monthly year-on-year declines. In Canada, existing home sales rose 12% in January from the same month in 2019, with prices up 11% on the same basis. The property market is especially hot in Toronto. The US Treasury 10-year yield is now just on 1.59% and lower by 2 basis points from where we left it on Saturday, and little changed over the past week. Gold rose on Saturday to $1,584 an ounce. However, for all the uncertainty, gold was only up 1% in a week. US oil prices are firm at just on $52 a barrel. The Brent benchmark is also up slightly to $57 a barrel. But in an interesting sign, the price of gas in China has hit a record low as demand collapses there. Other energy prices won't be far behind. And the Kiwi dollar will start today softer at just on 64.4 US cents. On the cross rates, we've held at 95.8 Aussie cents, and against the euro, we're also unchanged at 59.4 euro cents. That means our trade-weighted index is now at 70.2 and 0.6% higher than this time last week. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.